Welcome back, guys. Welcome back. The third lesson that we have will be based on market structure. So this is a lesson that is probably one of the most important lessons that you are ever gonna have to do throughout this whole course. So every single one of you guys that knows me will know that I'm actually a market structure freak. So what I mean by market structure is that you basically looking at how the market is trading, what is really happening. Are we trading up or are we trading down? So if you do know, we have two types of trending markets and we have one ranging market. So basically the forex markets can move in three different ways. So we've got like a high, down, up, down, up, down, up, down type of a movement. We've got down, up, down, up, down, up, down type of a movement. Then we have got an up and down, up and down, up and down type of a movement. So these are the only three movements that you will ever have to find in the market. So this one over here, we call an uptrending market. The reason why we call this an uptrending market is because the market is giving us a series of highs, a series of highs. So if you look at this, the market is giving you a series of highs. So this would be your higher low, your higher high, higher high, higher low, higher high, higher low. So the market is validly giving you a series of high highs and high lows on an upward trend. And this one over here, we've got a series of lows. So you've got a lower high, a lower low, lower high, lower low, lower high, lower low. As long as the market is maintaining on this momentum, then the market is validly trending down. So this is important to understand. I will not go through this in depth because there's a lot of material that you can actually find on the internet, that you can find on different books to actually understand these kind of markets. This is easy to identify and will be easy the more we do it on the chart. So again, we've got a ranging market. The market is just moving sideways. It doesn't really have a specific direction that is following. So these are the type of markets that we have. We've got three types of markets. We've got a bullish market, we've got a bearish market, and we have a sideways market. So the market keeps on moving up and down, as you can see. So this is important to understand because then this helps us get onto the charts and know what to expect. So this is important that I note. On a bullish market, all you want to do is buy. On a bearish market, all you want to do is sell. So it's important to understand. So it is really imperative that you really spot and identify the trend on higher time frames. If you're looking at swinging or getting longer moves, I would advise that you look at the weekly. But if you're trying to get like intraday moves, I would advise that you start looking at your trends on the daily time frame, especially looking at the most recent market that you have. So if you look at this was basically beginning of 2019. This won't help you anyway. So you really need to come and zoom into what is really happening right now so you can basically understand what is happening. So if you look at this market, this is very clear to actually spot and identify that we are actually moving sideways. So I'm going to draw that resistance there. I'm going to come into how to draw the support and resistance levels later. So this is a sideways trending market because then we do see from the examples that I actually drew, we do see like an up move, down move, up move, down move, up move, and then from here we do expect that the market will roll over to the downside. From here we do expect that it's going to come to the upside until we actually break these levels of support and resistance. So this is important to understand because then it helps you kind of like have a focal view and understanding of what to do whenever you come to the chart. So I'm going to go to a different pair as well. You can see all the USD pairs are basically kind of like ranging. So this is also like a ranging market. So you do have like a sideways move where the market is just moving up and down, up and down, up and down. So I'm going to come into explaining this a bit later on, but you can see, so this is down, up, down, up, down, up, down. From here, we're obviously expecting an upward move. So this is important and very easy to identify. I'm going to try and choose a different pair that has probably been ranging. So if you look at this market, right, so from the top of the market there, you can see that we did create a high, we did create a low, pull back, pull back, pull back, push, and we are now around this level, probably get a push down and then pull back, and then so this is a downtrend. So this is how you can basically identify a downtrend. So let's keep on choosing different pairs so we can actually kind of like understand what is happening. From there you do have a downward push, pull back, downward push. Oh my goodness, sorry about that. I'm sorry, forgive me. So you do have like Okay, let me go back to that chart. You do have this push to the downside, very easy to identify and spot. You do have a push to the downside. So you do have this push to the downside, pull back, pull back, push, pull back, pull back, pull back. From here, then we're actually seeing a series of highs, maybe to the upside. So this is important to note because this will help you understand what is really happening. So I'm going to try and choose a different pair from the GBP pairs. You can see that we were actually ranging and moving sideways across this level. So we did move like kind of like sideways till we broke out of this level, pulled back. Then we've been ranging around this level as well, hoping that we break past this level, and from here maybe get like a strong push to the downside. So this is how you can basically get to identify trends on the market. So I will be going through different types of markets and different types of trends so that you guys can actually kind of like understand how you can actually see and identify the market. So I'm going to choose a slightly difficult pair to actually get my point across. I'm going to choose this stock Nasdaq to actually get my point across, because I need you guys to understand that this method can basically work on anything. So if you really get to understand how I trade currency pairs, you can basically trade the stock market, you can trade the futures market, you can trade metals on this method. So it's important that you understand it. So I'm going to use this. You've got a low, you've got a high, 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 you've got a low. Obviously, from here, you're expecting probably a higher high. So the market has been pushing up, pause, push, pause, push, pause, push, pause, and then from here, you expect to push to the upside. So this is clean. This is very clean. This is a clean bullish market, which means you will not be looking for any sells in this market. So this is a very clean bullish trend, which then means you're obviously going to look for buys when you come into this market. This is important that you understand, because this eye will help you understand a whole lot of things. I'm going to choose a different chart as well to basically help you understand what I mean by that. So the markets did give you this low, gave you that high, gave you this low, that's a higher high. All of this is a higher low. From here, we're expecting a push to the upside, because you do see a push and a pause, a push and a pause, and from here we do expect a push to the upside. So it's important to understand market structure, because we are trading whenever we are buying. I need you to understand this. We are buying from the higher low to the higher high. So this is the move that we are trading. Whenever we're buying, we are buying from the higher low to the higher high. I will come back and explain this a bit later, but this is important to understand, because failure to do so will result in us doing the wrong things on the markets. Even on the selling market, we are selling from lower high to the next lower low. So this is important to understand, because it helps us know and understand what it is that we are doing. This will be the end of the third session talking about market structure, and I am hoping that I will see you on the fourth lesson. I cannot wait to see you. This is only starting to be interesting now. Get ready, brace yourselves. We are getting into the deep stuff, and I hope you guys are slowly understanding. And obviously, if you don't understand, you can pause and rewind the video to basically understand everything that we have discussed so far. I'll see you on the next video.